What's going on, great people? Welcome once again to Investing and Trading Made Simple. I am your host, Cedric Threet, aka Simple Cedric, and that's what I'm here to do. Make it simple. Make investing and trading simple. Because for a lot of people, it may not be easy, but it can be made simple. Today, I'm going to ask you a question. If you want to learn how to invest and trade, well, what kind of investor are you? What kind of investor do you plan to be? In this video, we're going to find out the difference between one type of investor and another, and then let you decide which one you want to be. As always, I need to share my disclaimer with you, letting you know that this video is strictly for educational purposes. I am in no way affiliated with any type of financial services company. I'm not trying to sell you anything, and that investing and trading involves risk. You can get substantial gains and you can get substantial losses. Financial instruments. There are different kinds of financial instruments out there, not musical instruments, but like musical instruments, these instruments can make some serious harmony when you put some or all of them together. You've got things like stocks, or as some people refer to them as securities. You've got bonds or mutual funds. You also have options and forex and futures and ETFs. And we're going to be talking a lot about some of these in the future. But right now, I just wanted to share with you some of that are out there, so you will know when you hear these terms, you say, oh, wow, that's another financial instrument. But we're not going to go into depth right now of what they are and what they do, except the stocks, of course, because we talked about that in the last video. So, what type of investor do you want to be? Do you want to be a long term investor or a short term investor? What's the difference between the two? Let's find out. A long term investor versus a short term investor. Now, the long term investor, they're the type of people who they like to buy a stock and they'll just hold it. It's like set it and forget it. Whereas a short term investor or trader, as they're called, because you're not an investor when you're doing short term, you are actually a trader. They like to buy and sell. They like to buy and sell. They won't set it and forget it. They'll set it and watch it for a little bit. Now, that buy and hold, they like to own that stock for maybe a year or more. Investors, they love to own their stocks for a year or more. They will buy something, they may own it for 5, 10, 15, some people 30 or 40 years. They will hold that stock and not sell it at all. Whereas a trader, they only own it for a short time. It could be 1 minute, 5 minutes, an hour, a day, or a week. They're not going to hold it more than a year if they are a trader. They're going to get rid of it pretty soon. Now, your long term investors, they use what's called fundamental analysis. Fundamental analysis is when you are looking at a company. Let's say you wanted to purchase stock in Amazon. Well, you don't want to just go and buy Amazon just because somebody said buy Amazon. You want to know why you should buy Amazon. So a long-term investor would do their research. It's all about research when you're playing this game. They will look at the earning statements, the profits, the sales, the revenue, how much debt that company is in. Those are your some forms of your fundamental analysis. Whereas a trader uses something that's called technical analysis. Technical analysis is when a person will go and they will look at the chart. They will study the chart of a company. They're looking at the price, the volume, and indicators, and we'll be getting into those a little later. So, which one is more important? Some people say the technicals are more important. Some people say the fundamentals are. I mean, it's an age old debate. It's according to your strategy, according to your risk management, your risk tolerance. It's up to you which one you want to be, an investor or a trader. Here again are some of the differences. Fundamental analysis, they understand the patterns in the company's financial performance. Technical analysis, understand patterns in company's share price. The fundamental analysis, you're trying to predict the future performance using financial statements. In other words, looking at those earnings statements and things like that. Whereas technical analysis, you assume historical patterns in share price will repeat itself in the future. You're basically staking your case that whatever this stock did in the past, it's going to do it again in the future. Fundamental analysis predominantly for long-term investment. Technical analysis, you guessed it, short-term trading. Fundamental analysis depends on financial statements, brokerage analysis, and news reports, whereas your technical analysis depends only on stock price charts and market volume. So there you have it, great people. In this video, you have learned what some of the different financial instruments are. You've also learned the difference between an investor and a trader. You've learned the difference between buying and holding and buying and selling. And you've also learned the difference between fundamental and technical analysis. So once again, thank you for visiting my class, what I call Investing and Trading Made Simple. Hopefully you've learned something today. If you like what you've learned, go ahead and click that subscribe button, hit the share button, hit the like button, let your friends know about it. We're going to keep growing. We're going to keep learning some new things. And in the next video, we're going to get into some charts. We're going to get into what charts are and how to read them. So thanks again for coming. I hope you come back again. Keep the comments coming. And hey, keep being great.